Have you ever had a client who had a fairly large allocation towards a particular asset or maybe an asset class? Either they really were attached to it or they had some sort of sentimental value attached to it, or maybe something related like it was inherited or whatever it might be. I'm guessing that that scenario might be familiar to you. I recently had a client who I was talking to, not a client, but a prospective client that I was talking to, and he had 30% of everything that he had allocated to one particular stock. So I wanted to share this video with you on the conversation that we had and how I was able to get him to think about it in a different way as we were mapping out his retirement plan. But if I haven't met you yet, I'm Dave Zoller and I run Streamline Financial with my business partner Tim, and we manage about 250 million in AUM, and we've got a team, Luke and Sean and our lean ops team here, and we're making these videos so that hopefully we can share what's been working for us, some of the communication strategies and marketing things that we're doing, so that hopefully it can help you too as you grow your advisory business. And if you'd like our entire process on how we talk from someone during an intro call all the way to them becoming a client, and how we use this thing we call the value formula and the one-page plan and our first meeting process, then look in the description below because I put a free training down there for you. So as that prospective client was coming back in and we were having the second meeting where we were presenting the one-page plan, one of the suggestions was that we were going to pare down that individual stock that was currently taking up 30% of his total portfolio. And I knew that he had an attachment to it, but he really didn't need to take that sort of risk for his plan to be successful. So that's the one thing I wanted to communicate to him. So here's what we did. And again, this can work for any client who's got some sort of emotional attachment to whether it's an asset or asset class or lots of times it's an individual stock. Sometimes it could be sentimental value tied to real estate. Carl Richards, actually where this idea came from in this communication tactic, if you want to call it that, came from. It came from a client of his who inherited it was a cabin. And maybe the cabin had been in the family for a couple generations, I think, something like that, where there was some sort of sentimental value attached to it. So the way that I use this communication tactic was you got to figure out how to remove the emotional part of the decision with the financial part of the decision. The mistake that I see a lot of advisors make is that they focus more on the financial side of the decision and not so much the emotional side. And this can lead to a problem because the prospective client or the client doesn't feel like you fully understand them. And when they don't feel understood, then it's a lot less likely that they're going to take your advice if you give them advice. Now, here's what the conversation went like. So it's kind of we started with saying this. Let's pretend that you woke up the next morning and somehow, magically, that stock had been liquidated in your account and now is sitting in cash. Now, there's no tax that you have to pay magically on the sale, which is great. What would you do now? You've got $500K sitting in your account in cash. Would you buy back that individual stock? And would you put 30% of your portfolio back into this one stock at today's price? So then the prospective client thought about it, and then he said, well, probably not that amount, but I would want to keep some of it. I do want to have something in this stock. So that was the initial part of the conversation that led to the rest of the conversation, where he ended up getting to a percentage allocation that made sense for his plan, but it wasn't the 30% allocation that he originally had. So it was just a helpful way to frame the conversation or frame this idea of how much do you have in this one particular asset class? Could you think about it in a different way? It's just a good way to separate the emotional side from the financial side. It's a great way to start the conversation so they can think about it in a different way. And then if they end up moving towards what you were going to recommend, then you could start thinking about, let's say there were tax consequences, because that was a magical thing that happened where something was liquidated, but let's pretend it's the real world and there's tax consequences. Then you can start the conversation of doing this sort of correct selling over a period of time or whatever it might be, where they're already open to knowing that they have to pare back that holding. Now do it the right tax way and then move on from there. So I hope that was a helpful idea, just a helpful way to talk to someone who might be over allocated to one particular asset class or stock. But if these sorts of communication style videos are helpful to you and you'd like to see more of them, let me know. Either put a comment below or click like on this button so that I know, and then I can make more of them for you. And have a great rest of your day. Take care.